Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Kwani Good Night. Today is March 19th, Thursday, and I'm Huan Peng Ray. Alright, so today we'll be looking at a few topics. First, we'll take a look at Fate, then briefly check out Micron, and after that, we'll review the current developments on the battlefield. Because today, actually, there was some pretty big news. Qatar's natural gas field was attacked, which is a major event. This is actually pretty serious, and we'll discuss it in a bit. Alright, so for today, we have this topic. The data on relief funds and the news stories aren't really that important. Our main focus is on the FOMC decision. Alright, thank you. The unemployment benefits data will be released at 8:30, so we'll take a look at it together. Right now, the initial claims are expected to be 215,000, which is about the same as the previous period, just the opposite. As for continuing claims, they're also about the same as before, roughly 1.85 million. So for now, let's keep an eye on this. Has there been any change in the job market situation? The new home sales for January are expected to drop slightly to 722,000 compared to 745,000 in the previous period. As for the month-on-month figure, it's expected to see a significant decline of minus 2.7%. You can see that recently, home prices in the US are still relatively high. Right now, the prices of many things, including chemicals, are still pretty firm, and this could also affect buying sentiment. Alright, next let's talk about yesterday's interest rate decision. What exactly did they say? After looking at the Fed's rate decision, I felt that their statements were actually very conservative. A lot of people were eager to speak up and ask questions, and I really wanted to know, including questions about their current views and outlook for the future. People wanted more definite answers, but he kept dodging these questions, repeatedly saying things like, "We're still not sure, we need to keep observing, and we're still looking at the data." He said they need more details, so right now it seems like he's probably trying to avoid having his words overinterpreted, or so that what he says isn't misunderstood or misinterpreted. So he's simply choosing to say even less or leaving everything to be discussed in the future. That's the current situation. That's why, as the title says, there's a lot of uncertainty right now, so the Fed can only pause and wait and see. So the current situation is that even they aren't really sure what's going to happen in the future. The current direction, as we've discussed before, is that maybe just a few people around Trump can make decisions and those industries won't be left behind. So right now, nobody really knows which way things will go. So overall, it's actually a really confusing and unpredictable situation. As for the preset expectations and the economic forecast and the whole SAP section, they're kind of like revised upward economic predictions. So basically what that means is the projections for Envy are actually pretty good. And then productivity has improved over the past few years, and this improvement in offline learning has been ongoing. They also mentioned that overall, they haven't factored in the boost from AI yet. This means that looking ahead, there's even more confidence in economic growth, since AI could provide additional support. So everyone will be more productive or have higher output and so on. So actually, if you look at the economy, people are still quite confident. On the other hand, inflation is unsurprisingly on the rise. And right now, since we've only been a few weeks into this war, the impact of oil prices still needs to be assessed. And everyone can see that right now. There's quite a big difference between the price of WTI and Brent crude. This is mainly due to differences in supply and demand structures. At the moment, the US is still relatively resilient in this wave of energy shocks. It's one of the countries less affected, and since the Federal Reserve is, after all, the US central bank, they still need to assess the situation under these circumstances. Actually, if oil prices go up, it's also a good thing for some oil companies. So for now, there won't be a conclusion on this anytime soon. This year, they were originally focused on the idea that the inflation transmitted through the wealth effect would ease the most, because before the war started this year, that was the expectation. But now, with the impact of rising oil prices, it's clear that the tariff policies that started last year, which were expected to continue, are now being overturned. They might gradually be rolled back, or some agreements with various countries might be canceled, even though the current administration is still in place. Trump is still trying to maintain those tariffs, but right now, this is the situation. We're still watching to see if the rollback of tariffs will actually happen, but this situation could disrupt that observation or trend and throw off the current rhythm. So for now, that's really where things stand. People are generally pretty uncertain, and there isn't much clarity about the future either. Someone asked if he would describe the current situation as stagflation, but he avoided using that term because he thinks the situation right now is just, it's still far from what happened in the 1970s, because back then inflation was in the double digits, which was a really high level. But right now, the Fed is still very confident about the economy, and you can see that they've even raised the economic growth forecast. Also, unemployment is staying at a relatively low level. So it's around 4.3 or 4.4, and recently it's been 4.4. As for inflation, even though it's relatively high right now, it's only just above the target range. The target is at 2%. So honestly, you can't really say it's that high. It's just that there's still a bit of a gap from the target, and they haven't been able to bring it down yet. So it doesn't really feel like inflation is out of control like it was in the past. Right now, inflation is actually under control, and there's no need to panic. They don't think the current situation can be described as stagflation. So at the moment, everyone's still relatively relaxed about it. That's the outcome for now. All right, so right now, he actually mentioned that the level of uncertainty is extremely high. Every March, June, September, and December, the SEP is released, which covers forecasts for the economy, employment, and inflation. He mentioned that it would be better for the monetary policy statement to be released this time, because with this release, nobody really knows what to expect. And their results might end up being about the same as last time, because if you don't know what the future holds, you just stick with your previous forecasts. So right now, they still need more time to observe changes in various economic indicators. He also reiterated that it's still very hard to judge the impact of oil prices on the economy. So I would say they're still being cautious, because originally, if it's the officials who are assessing the economy, they're the ones who, after looking at a lot of different information and various reports and doing some analysis, it's actually possible to make some predictions about how the current situation might develop in the future. So he could say, for example, if we assume that, what would happen if it ended now? What if it lasted for another month before ending? Or let's say, what if it could be over within a few weeks? He could probably offer even more different scenarios, but he didn't say anything because that might be because if he did say something like we just mentioned, there would be people who would, everyone has their own interpretation, right? So maybe it wouldn't be that interesting after all, which is why he hasn't really dwelled on it. So basically, it means we just have to keep watching and waiting. At this point, you could also interpret it as if for now or in the near future things end quickly, then everything might gradually calm down. But this gradual calming down, well, that was during the time of the daily meetings. And as for what happens next, we can see that energy infrastructure is being hit and disrupted step by step. This kind of thing will actually have a more lasting impact, which is something we'll emphasize and talk about later. But just to mention it briefly here, right now, if this energy infrastructure is being attacked, if this really is the end, then energy prices might actually stay high for a longer period of time. So why is it that everyone is talking about this fate right now? For example, some people think this is a bit pessimistic, but the main point is that they admit inflation hasn't made any real progress. Basically, inflation just won't come down and is hovering at this level. Also, they mention that with inflation not coming down, it's possible there won't be any rate cuts. On top of that, someone asked if they had discussed raising rates, and they said they did talk about that possibility. So they didn't rule out that chance, which basically means it's still on the table. It's possible, so we'll have to see how things develop in the future. Everything still depends on how things play out. In addition, they mentioned that the current interest rates are relatively neutral, which means there's not much room left for further rate cuts. Also, this time, the Fed had a policy statement. Regarding the mainland's dot plot, it's open to interpretation, so I left it out. That's the current situation. the difference between this plot and the last one is a lot of officials have scaled back their inclination to cut rates, and many who originally expected 2 rate cuts this year have now changed their stance to just one. So among the FOMC members, it looks like there's a consensus for higher interest rates to stay in place for a longer period. On the other hand, as we mentioned at the beginning, the members are more confident about economic growth and employment. But being more confident about employment basically means they're less confident about inflation. So right now, the main focus is still on inflation, which means inflation remains the biggest challenge at the moment. So if inflation can be brought down actually this year, well, things wouldn't be so volatile. But as for the dot plot, why are there still so many people projecting a 1 rate cut? You can see that in reality, people still have some expectations, hoping for at least a 1 rate cut this year. So actually, what happens next depends on inflation. And right now, inflation depends on oil prices. It's all interconnected. Everything is tied together. That's the current situation. So now everyone is still closely watching oil prices, the situation in the Middle East, and whether the Strait of Hormuz can remain open. There are numerous energy facilities involved. It's still manageable for now. After the recent incidents in the Strait, attacks on natural gas and oil facilities have temporarily stopped. All right, next let's talk about this topic. Qatar's North Dome gas field was attacked. To give a bit of background, let's talk about the history here. As you may know, from 2017 to 2021, Qatar was sanctioned by several neighboring Gulf countries because they accused Qatar of supporting terrorism and similar activities. Countries like Saudi Arabia and the UAE, among others, imposed sanctions on Qatar. At that time, Qatar actually relied on Turkey, Iran, Oman, and other countries to get through the crisis. So in fact, Qatar's relationship with Iran is relatively unique. North Dome. They need to maintain friendly relations. So now actually the situation is, afterwards, the two countries jointly developed a vast natural gas field in the Persian Gulf. You can see from this map that the field is actually connected, and Qatar and Iran call it by different names. In Qatar, it's called the North Dome, while in Iran, it's called South Pars. So it's actually the same gas field, just with two different names. It's basically the same reserve, but because it's divided by the national border, each country just extracts from its own side. So how important is this North Dome? Well, Qatar is known for being very wealthy, and you can see that their social benefits are excellent. Qatar Airways is also very high-end. This gas field actually contributes about 60 to 80% to Qatar's government budget. This gas field also allows Qatar to export natural gas all over the world, making it one of the top 3 natural gas exporters globally. So this gas field is all about exports. Relying on this gas field, Qatar exports about 20% of the world's natural gas. This field is extremely important and massive in scale. Qatar has also planned to continue expanding production from this field in the future because actually, they've also discovered that there are still many reserves that haven't been developed yet. Looking ahead, Qatar originally planned to increase production capacity by 85% before 2030, but now the North Dome, the natural gas processing facilities have come under attack. So the impact going forward is that now Qatar has already committed its natural gas to its buyers. So, if we look at it this way, even if the situation ends temporarily, they still can't immediately resume supplying natural gas. They have to repair the equipment first before they can start up again. So basically, this means the interruption in natural gas supply will last even longer. That's a pretty significant impact. Now, after talking about the North Dome, let's move on to the South Pars. As we just mentioned, the North Dome is extremely important. Almost all of Qatar's revenue or wealth comes from there, but the South Pars is actually just as important for Iran. More than 70% of Iran's domestic gas demand comes from this gas field. Mainly, most of the industrial, commercial, and everyday civilian uses all rely on this field. This gas field holds a very important position for Iran as well. 80% of Iran's electricity comes from natural gas power plants. These fuels mainly also come from this oil field, so basically, if this oil field were attacked, it would be like cutting off the lifeline of Iran's economy. The South Pars field also account for about 40% of Iran's total natural gas reserves. So, for some people, this explains why Iran would have such a strong response. So why is everyone wondering, wow, why would Israel strike this natural gas field? What motivation do they have? And now it seems like Israel went ahead and attacked this gas field on its own without support from the United States. So, looking at some analysis, they mentioned that maybe the goal is to create an energy panic to destabilize the Iranian regime and fundamentally cripple Iran. They might also want to create internal divisions to weaken Iran from within. Basically, if you end up without electricity and a lot of basic infrastructure stops working, people's anger toward the government would rise sharply. That could lead to people coming out to protest against the government and so on. Actually, this would be a very deadly blow to the current Iranian regime. Now, what we're seeing is that in the past, Qatar and Iran had a very good relationship, and the two countries jointly developed this natural gas field. So, Israel's attack on Iran after the oxygen gas field, Iran actually went and attacked its own natural gas field. Right, it feels like they're cutting off their own limbs, like a scorched earth tactic. Because basically, it's like the two of them are thinking the same way. If you attack, another way of looking at it is that you're also hurting yourself. Actually, when Israel bombed Iran's South Pars at the beginning, it already affected North Dome, so all these things are interconnected. After this very serious incident happened, Trump also got involved at the table. He became a player and tried to distance himself. He mentioned that Israel would not attack and would not attack South Pars again. And then the way he put it, it sounds like the US might attack energy facilities, but this is something we'll have to keep watching. At the same time, he also threatened Iran, saying, don't attack North Dome again. If you do, the US will attack South Pars. So basically, it means. So now what we need to do is keep an eye on how the information spreads and develops going forward and see whether both sides will continue to target each other's energy infrastructure. Right now, it feels like this is actually a pretty critical point to pay attention to. If these energy facilities are attacked again, we can foresee that both the North Don and South Pass will be hit with large-scale strikes. This would actually have a huge impact on global energy supply and the overall development of the world economy. As for what happens next, it's possible that everyone will exercise a bit more restraint in this conflict, avoiding further attacks on those facilities, and instead shift to more limited strikes. That could be the direction things develop. So moving forward, that's something we need to keep an eye on. Because it's already reached the point where, for example, Iran's South Pass was attacked by Israel, and Iran retaliated by striking Haidar. That's a natural gas facility. So right now, there has already been some impact. Next, we'll have to see whether this impact will intensify or if the effect on the market will deepen. Just recently, today, there's been a sharp rise in natural gas prices, and oil prices have also continued to climb, mainly due to the escalation of the conflict in the Middle East. So people might wonder, if Qatar can't export natural gas, who will be affected the most? Actually, when it comes to the biggest impact, the top three include Taiwan. Taiwan is ranked third. You could say that about 25% of Taiwan's liquefied natural gas comes from Qatar, so Taiwan will actually be under quite a bit of pressure in the future. This actually brings up and highlights an issue, which is that right now the Middle East war seems really far away from Asia, since this conflict it doesn't really have much to do with Asia, but the main reason is the supply and demand for energy. Of course, in Asia, different countries and regions have their own energy needs. There are huge problems that can't be ignored, and actually, this is kind of turned into an Asian issue. You can see from this that the main impact includes countries like South Korea, Japan, Taiwan, China, India, Thailand, Singapore, and so on. All of them are heavily reliant on importing oil and gas from other regions. On the other hand, Europe actually doesn't rely much on M5, and the US is an energy exporter. So for Europe and the US, the impact here is actually pretty minimal. The main victims are all these places in Asia. Next, let's talk a bit about Micron's earnings report. The report was really good. In fact, it was extremely good. Not just good, but the main thing to note is, first of all, their capital expenditures. Right now, everyone still has a certain attitude toward these capital expenditures. I'm also concerned about whether the company can maintain its high profit margins, so that's a current worry. The main concern now still comes from the market. There are a few points that aren't so great at the moment. because as we just saw, even though they don't talk about a lot of things and it all seems pretty uncertain, people are saying you're being too aggressive. The war over iron still isn't over yet, and then oil and natural gas prices keep rising. So what about these past few days? There might be some volatility in the short term, but going forward, it should gradually fade away because the fundamentals are still there. There should still be some room for growth in the future, and any pullbacks are expected to stop at key support levels, so everyone can consider your own strategies and how you want to position yourself. So overall, the sector should still have opportunities going forward. All right, so this is Mei Bao. According to what he said, if recently it pulls back by 5% before the market opens, it's still above the short-term moving averages, so the trend hasn't been broken. The upward price movement is still intact. It's still stable. All right, let's take a look at the main price changes right now. You can see that overall, now as things develop, day by day, and as news continues to cause fluctuations, yesterday, for example, the US dollar saw a clear increase, and right now it's still holding at a relatively high level. So going forward, actually, after reaching this relatively high level, it will correspondingly have a certain impact on the stock market as well. We'll keep an eye on that. Another thing is oil prices, because right now, honestly, people might say I wouldn't write it this way, but the increase has been pretty rapid. So looking ahead, we'll see if it drops back a bit, maybe to a level similar to the current interest rates, roughly around 3.6 or 3.7. As for gold, right now, the pressure on gold will probably last for a longer period. Because at the moment, if US Treasury yields, the US dollar, and interest rates in the US don't go down, then gold will likely remain weak for some time. So everyone can pay attention to this. Actually, every year, or well, let's say every year as a unit, since we're all participants in the market, investing together, this is really a place where our collective human consciousness converges. Every year, there are different strategies at play. For example, last year, there were also some precious metals, but actually last year, oil basically didn't move at all. This year, it looks like, in contrast, those assets are taking a bit of a break, especially metals, so everyone can really get a feel for the rhythm of investing. In other words, you can observe and see for yourself. Right now, the main time frame people use is yearly, so at the beginning of each year, everyone can think about how to plan their investments for the year, since each year has its own themes. At the moment, gold still seems to be a long-term safe haven asset. There's still demand for it, but right now it looks like its value is relatively high compared to the US dollar. The dollar is strong and interest rates are also relatively high. With bond yields being high as well, gold's appeal has come under some scrutiny. But right now, Bitcoin has rebounded a bit. So at this point, everyone can think about each investment cycle or each year as a time to reassess our perspectives and views on each asset. Things can change. This is something everyone needs to keep in mind. If the current situation is more volatile, then changes are more likely to happen. In the past, if we had several years of a bull market, the performance of a certain type of asset might have been more consistent, but now that consistency just isn't there anymore. This is the 30-year bond yield, so it's the same situation. Yesterday, after the Fed made its announcement, there was a pretty clear drop, but right now it's still staying at a relatively high level. Looking at things now, the US stock indices are all trending down, so they'll probably keep heading lower. As for what happens next, it really depends on what everyone does. In this context, you might want to position yourself in certain individual stocks, especially now, as we can see that a lot of investors in the market seem to not be too worried about the current downturn. Why is that? It feels like everyone is expecting that once this suddenly ends, there will be a big rebound. This topic is really hard to predict right now. So my suggestion is that you should still keep some positions in the market, and you might be able to. Only then will you have a chance to catch this wave when the rebound comes. As for gold, should still be a great thing. It should at least continue to fluctuate around these high levels, so at the very least, but as for when the war will end or when the rebound will actually happen, it's pretty hard to know, and honestly, nobody really does. So right now, it's basically all just a big cloud of uncertainty. But in this context, since geopolitical factors usually don't have a long-lasting impact, you can still keep some positions in the market to try to catch this rebound. As for the large caps, they've already broken below the annual moving average, so you can see a lot of different trends happening. And in that case, actually, you can also see that, oh, wait, that's right, they've also broken below the annual moving average. So going forward, the stock indices are still under a lot of pressure. Next up is the Philadelphia Semiconductor Index, which has actually been performing more steadily. We can talk a bit about this over here in the second half. There should be a lot of demand coming up. Right now, everyone can keep an eye on chip manufacturing going forward. Also, pay attention to companies involved in testing and packaging, because in the future, whether it's for AI, GPUs, CPUs, or whatever, they're all going to drive demand for chips. So, chips have a pretty long cycle. Of course, it's not quite like building data centers, where you might see there are more factors to consider, like there might be more depreciation or more challenges and conveniences involved. But if you're making a high-end product, like a premium chip, there's less resistance. You just need to get it made or meet the demand for it. Its applications are broader. Like a premium product, you can use it in many different areas. So moving forward, these chip-related stocks will have long-term potential and more possibilities in society. All right, so the number over 2,000 is actually still going down. And right now, as we'll see in the pre-market, a lot of stocks, especially those that used to represent our growth stocks, are still in a waiting phase. That's the situation at the moment. But there's still room for rotation, and SPW is actually the same. Right now, it's generally trending down, but if you look at SPW, its performance isn't following the 2,000-point trend. It's actually doing a bit better than the index. This shows that currently, the overall source market is like this. There's some testing of the waters, but there's still a lot of capital staying in the market, waiting to participate in the next wave. Now, let's look at the current global situation. So actually, after today's temporary escalation, there's been a lot of discussion. In fact, there's already been a lot of talk before about whether the US will send troops. We've actually shown you what it would look like if they did send troops. As for predictions, actually, the media has always liked to discuss this topic. Recently, as you see more and more media outlets talking about it, the possibility and options for sending troops are being discussed more. The first report came from Reuters, saying that Trump is considering sending more troops to the Middle East and is thinking about the next steps in the war. He was pretty clear, saying, "I'm considering conscription," but he didn't specify what the next step would be. As for the next step, well, we still don't know what it will be, but there are a lot of options. Some of those options include sending troops to several key Iranian facilities, such as Crown Island, the Strait of Hormuz, and other places. Like launching a surprise attack on their nuclear facilities, maybe taking away their enriched materials, and so on. So right now, that's the situation. There are White House officials, speaking anonymously, have said that no decision has been made yet to deploy troops, but it's wise to keep all options on the table. So basically, this is something that could actually happen, and they might have no choice but to do it later on. Why is that? Because as we mentioned yesterday, after the US ramps up the pressure, it might look for a chance to pull out. And if they want to increase the pressure, one relatively simple way is to send troops into Iran, achieve some kind of phased military success, or declare a unilateral victory and then withdraw, ending the conflict. So this is possible, but it's also very risky, especially if there are casualties. Now, if it doesn't succeed, they'll have to bear a huge cost. So basically, this whole thing is a pretty big gamble. All right, so the main point for now is, as you can see below, these are the key points. If you don't send in troops to clear things out, it's really hard to achieve these goals. So going forward, we'll just keep an eye on the situation. Will they send in troops? That's the question. All right, moving on. CNBC actually reported that Iran's supply is pushing the Gulf countries to the brink of collapse. Because right now, from what I see, it seems like even if the Gulf countries are attacked, they don't fight back. I don't know why, but actually, it's not that they won't fight back. It's that they haven't fought back yet. So for now, that's the situation. If the Gulf countries are attacked like this again, they might actually retaliate. It's possible they'll respond even more strongly, cooperating with the US and Israel. Or it's also possible that the Gulf countries will remain passive, but instead increase their efforts to mediate and try to calm things down. Also, Zhu Hang mentioned this afternoon that he referenced a report from Germany's Der Spiegel. Now, let's move on to this topic. As for the Houthis at the Red Sea outlet, they've actually remained quite passive. They still control the Strait of Hormuz, but they no longer control the Bab el-Mandeb Strait in the Red Sea. So if you want to disrupt the free passage of exports, the Houthi group could bomb oil tankers coming out of the Red Sea at the Bab el-Mandeb Strait, which would basically mean a complete blockade of this Middle Eastern shipping route. So the consequences of this would be pretty serious. If the fighting continues to escalate, it's also possible that the Houthis might get involved, because we've already seen that Hezbollah has mobilized all its forces. The militia groups in Iraq are also able to mobilize, so right now it's just that the Houthis haven't fully joined the fight yet, and there hasn't been any major action from them. But going forward, this could also become a factor, though again, this would mean another escalation. Iranian lawmakers have also said that Iran itself might possibly get involved. After the fighting ends, Iran will push for control over the Strait of Hormuz, which lines up with what we've been talking about today. Iran wants to make sure that once the conflict is over, it has a say and some control over the strait. That's part of Iran's current plan, to secure its influence there. They want to control this strait, collect tolls, and possibly even block some Western or newly emerging Western countries' ships from passing through. On another note, there's some industry news. Samsung is expected to invest $73.3 billion this year. They're expanding chip production and conducting related research, and their capital expenditure far surpasses TSMC's. So why are they doing this? It's to compete with SK Hynix for the leading position, because as everyone knows, HBM is currently what SK Hynix does best. Now Samsung believes that. From NVIDIA's perspective on the current situation, that's also why I just mentioned related stocks in the chip sector. You all might want to keep an eye on them, as there will be a longer-term upward cycle ahead. Okay, so HSBC is considering large-scale participation in the coming years. So this is just that AI might impact companies at a relatively early stage, but as for whether this will really take off, the company itself hasn't confirmed anything yet. This is also part of the company's midterm plan, so whether this will actually happen in the future is still just a rumor for now. Of course, we're just sharing this here for your reference. Okay, regarding US policy developments, there are reports saying that many people in the US are watching the president closely. What exactly is he doing? Nobody really knows. As for what Trump wants to do, public approval, or rather disapproval, is actually relatively high. Right now, people generally have a negative outlook on both the ongoing conflicts and the economy. So if we look at demand, this will put a lot of real pressure on Trump. It just depends on when he'll actually be forced to make a move. As for the market, there's a lot of news out there. Right now, Da Tong and I believe that the impact from the Middle East will actually last even longer, and people might be underestimating it. He's also lowered this year's S&P target from 7,500 to 7,200. It seems like everyone is paying too much attention to how oil prices are affecting the market. Just a reminder, you also need to pay attention to whether the Strait of Hormuz will reopen. If it doesn't, that could have an even more serious negative impact on demand. Actually, these two things are closely linked, and both are really important. So looking at it, it seems like everyone will be paying attention to both at the same time. As for what comes next, we're seeing that. According to the news index, retail investors have been decreasing. There has always been this tendency for people to buy the dip, with funds flowing into the market. But because of this conflict, and since there are still no signs from Wall Street, this initial wave of dip buying has started to drop off noticeably. Plus, oil prices are still relatively high right now. Actually, in modern times, you can see that. For spot trading, people are still buying blue chip stocks, as well as new tech stocks, and those related to AI manufacturing centers. So right now, everyone is basically waiting. If, say, the war ends soon, there will probably be a rebound. That seems to be the situation at the moment. Bank of America's analysis suggests the market wants an exit strategy and a ceasefire. That's what everyone's hoping for, but when it will actually happen remains uncertain. On the other hand, the financial environment has been tightening all along. Actually, even if the Fed wants to do something, it might be difficult. There are only so many options, especially if oil prices keep rising. Now finally, let's take a look at this last point. As for oil prices, they're currently staying at a high level. Right now, there's a bit of a disconnect between WTI and Brent, so Asian countries are going to feel more pressure than the US going forward. You can see that the reason the market is under so much pressure today is because Brent is getting close to $120 again. It looks like it's very likely to break through $120, so everyone is getting nervous. On top of that, European natural gas prices have started to soar. But as for European natural gas, it seems that right now it should just be a reaction to an event. So we'll have to keep watching to see if it stabilizes. Let's take a look at this now. Jewelry, and also the blood type industry. Looking at the number of people in this industry, it seems that the fund is 205,000, which came in below expectations, and for consecutive periods, it's been 185,000. Yeah, it shows about the same, and the previous numbers were slightly revised down, but overall, things still look okay. As for the Philadelphia Fed Bank's monthly report, the impact of this announcement shouldn't be significant, but at the moment, as for any changes, right now, before the market opens, the S&P is still trending downward. Overall, it's still continuing to move downward, and that's the same for the NASDAQ 100. It's also showing a downward trend, though now there's a slight upward movement. So at the moment, there's still quite a bit of pressure before the market opens today. Let's first take a look at the pre-market gainers and losers. You can see that actually, if you look at the pre-market gainers and losers, especially among the high volume stocks, a lot of them are still those previously popular stocks. As we mentioned before, right now there are still a lot of people speculating on these growth or cyclical stocks, and that's the current situation. But as for when the market sentiment will improve, that's actually pretty hard to say. Let's take a look at the S&P 500 components. At the moment, the biggest loser is Newmont, which is related to the drop in gold prices, or stocks like it, such as Barrick Gold and also Freeport-McMoRan and Newmont Mining. There are also quite a few memory-related stocks involved, but also stocks like AppLovin and Coinbase, Upstart, and so on. As for the stocks that are rising, most of them are defensive stocks right now, like CF Industries and MOS. This is because orthodontics, it's because activist shareholders are being pretty aggressive. So at the moment, it looks like So right now, it seems that all the popular large cap stocks are on a downward trend. Even though the trading volume is high, most of them are clearly declining, so there's still a lot of pressure today. At this point, everyone really needs to keep their positions in the market relatively controlled, even though we really don't know when this will end, and everyone is hoping it'll be over soon. Some people think it should be ending already, but honestly, it's hard to say. We can't rule out the possibility that this situation might just be put on hold for a while, like what happened with 251 before. So everyone stay alert or take appropriate measures to hedge your risks. That would be better. All right, that's all for today's Quanting Evening News. Thank you all for watching.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.